Vesta Divorce, how we came about 13 years ago. We originated in New England. And Vesta Divorce was created because we felt that people going through divorce were being underserved, that they were going through a circumstance where it was combative, it was costly, and it was confusing. And it didn't have to be that way. Many of us have walked down the road of divorce. I did after 24 years of marriage. What Vesta came up with is their own collaborative style, Vesta collaborative style, and hit the beachhead here in Southern California about 5 years ago. We know we're doing something right because we spread across the country. And what we do is we have put together hubs of professionals that are of the type of skill sets that people normally need when they go through a divorce, like an attorney, or a real estate professional, a mortgage lender, someone to help them with their emotions, like a licensed marriage and family therapist or a divorce coach, and someone like me and my partner, Greg Schmidt. We're both financial advisors. We're both wealth asset managers, but we have a specialty expertise as CDFAs. We're certified divorce financial analysts. And that's different than advising someone on stocks, bonds, and mutual funds, or retirement planning, or tax mitigation. It's educating people on how to negotiate an equitable resolution to dissolving your marital enterprise, the marital company. And something lawyers don't do, take into account taxes, risk, liquidity, and income. In other words, answering the questions, what's the impact on your life if you divide assets in a given way? So we all have specialty skill sets. Besides those core skill sets, our network is, we've got just about anything you need when you go through divorce, from a career coach to forensic accountant, a business valuation person, estate planners, CPAs, parenting coaches, just about any skill set you need. We have that available for you in our network. But the core skill sets are what I mentioned. Lawyers, of which in our group we have Patricia Van Haren. She's a mediator and a collaborative attorney. That is a process whereby you hire a whole team and you agree that you won't go to court. You'll reach a resolution through collaboration. And then we have Elizabeth Johnson. She's a litigating family attorney. Myself and Greg Schmidt. Dar Martin is our realtor. Tommy Evans is our mortgage lender. We also have Cheryl Woodhouse. She's a licensed marriage and family therapist. That's a group here in Southern California. What is unique is that when I went through my divorce, I had all those skill sets, but guess what? They were all siloed. They didn't work together. I'm a huge team guy. I just told you I played college sports. I coached youth sports for many years. I used to have 100 direct reports. I believe that a team is more powerful than an individual. So Vesta did something brilliant by having people leverage their skill sets, leverage their confidence in one another, leverage their experience with one another to achieve better outcomes. And what that is, it achieves better outcomes for you because it's less costly. You have more understanding of how to get through the process, how you're going to analyze and divide and negotiate things during it, and more importantly, what your life looks like in post-divorce, how you're going to make sense of it all. And that's what everybody asks. So if you're leveraging those skill sets with people that like one another and have experience with one another, that's got to be a better outcome. Plus, you're going to save time on duplicity of loading up information each time for each different person. Now we have, as I said, a unique program. You can work with any one of us or any combination of us or all of us. If you have people outside our ranks, we'll work with them as well. And the best advice I can give you is to reach out for an individual consultation. Some of us only practice within the state of California. Others of us have clients all over. For instance, Greg Schmidt and myself as CDFAs, we're not limited by state lines. So whether you're in Timbuktu or Tustin, we can work with you. So in the time that we've been putting on, what's unique about Vesta, again, we have our own practices, but we've all gone through a very stringent background interview and application process. And where we've pledged to come together at Vesta to work collaboratively, but we all have our own practices. So please reach out for an individual consultation. And what we decided to do, we put together these no-cost educational events. And in the time since we've been doing it, literally thousands and thousands and thousands of people have attended these events like you, and we've helped a great many of them. Every divorce is different. We say divorces are like snowflakes because everyone is different, and yours is different too, but every divorce also has some commonalities. By the way, there's a 95% chance that you will reach a settlement and you'll get through this. It's going to be, there's some trying days as you do, but you're going to get through it. I'm going to give you, I'm a big visualization, affirmation, motivation, self-actualization guy. So as we get ready to say our disclaimer and then kick off with Dar, I want you to first off give yourself a pat on the back for being here. Because I know from personal experience how tough it can be. You're mentally, physically, and emotionally exhausted. And the fact that you're here says you've taken the right step towards getting your mojo back, getting your power back. And there was a light shining bright in you before you got married. That light is still there. All you got to do is dust it off and find it. And there's a lot to live for. Your life is not over. I thought I come up with many things. Today I thought of the word sovereign. Sovereign. There's a sovereign state and your country is sovereign. But you know who the king and queen of sovereignty are? You are the king and queen of sovereignty over yourself. Period. That's the paramount one that you should be dedicating yourself to be responsible and sovereign and accountable and good to and expecting high things of yourself. And if you're accountable to yourself in a good way, everyone else will be happy with you. So give yourself a pat in the back. Number two, whatever part you may have played in the circumstance you find yourself in, I believe most people have played some part. I know I did. Forgive yourself for that. Forgive yourself because yesterday's history, tomorrow's a mystery, today's a gift from God. That's why they call it the present. And be thankful for today. And you got a lot of bright days ahead. Hold on to that. All right, here's my disclaimer in my own words. I don't read it, it's up, but I'm going to say it in my own words. This presentation is to be considered general, educational, and informational in nature only. It's not to be regarded as any specific legal, therapeutic, financial, real estate, or mortgage lending, advice. It's purely educational. We will have time at the end for a couple questions, but we hope you won't mind if we don't get to them because, and also we can only answer questions in a very general way. We can't give any specific opinions, in a forum like this. And that's why I urge you strongly to reach out for an individual consultation. If you reach out for a consultation with Greg or myself, I'll also share a couple of tools that will help you kind of get your financial thoughts in order. All right, so there's my disclaimer. With that, I'm going to introduce Mr. Dar Martin. Dar is a highly, highly accomplished realtor and also was educated as a CPA. So his mind works a little bit different than most realtors. He understands the numbers. He has a tremendous passion for what he does and a long-standing experience, highly successful experience helping people. And in particular, he has a specialty and expertise in helping people that are going through, the circumstance of divorce. So hold on, we're getting ready to, get off here, and I hope you get some things that you can take back and apply. Dar?
Thank you, sir. I want to thank every one of you for attending. Let's see. I don't see myself as a presenter here, so let me see that, and then we go from
We can see your screen, and we can see you.
Oh, okay, got it. Good, great. Hi, my name is Dar Martin. I'm a realtor with Pacific Sotheby's International Realty. I'm based out of Orange County. I work with a team of real estate agents, and we cover Los Angeles County, Riverside County, and LA County. Los Angeles, LA County, and Orange County. I am also a CPA. but I don't practice, but I have the knowledge. So I enjoy real estate very much. I am trained as a real estate collaboration specialist in divorce. I'm also a member of Collaborative Divorce Solution in Orange County. Lots of references to collaboration and more on that. But today, it's not about me, it's about you. So let's start with where we are going today. You are at an emotional crossroads in your life. Your system has received a shock, and it's very difficult. We all know that from the professional and personal experiences. The decisions you make today have a lasting effect. They will affect your future, and we want to make sure you understand what is ahead of you and what you're going to go through. Divorce is a complicated, difficult process, and it's more complex than you can imagine. There are multiple areas in a divorce that you need somebody to work with or you have to deal with. There are the legal aspects of divorce, the emotional support, the matters of financials, income divisions, assets, and then there is real estate and how to finance that real estate piece. And it takes a team of experts to guide you through that. That's why we don't want you to make any rush decisions. Our goal is to show you what it takes to make informed decisions. Informed decisions are the best way to guarantee what you're going to do in the future. No one is an expert in all these areas we mentioned here, and that is important to know. No one on this call, no one among our colleagues know all the factors you're going through. So informed decisions is the name of the game. Your real estate piece, that's what we are here to talk about tonight, is your most valuable asset. There was a study done a while ago, and they've repeated it probably every 5 years. And the study basically indicates that the most valuable asset people have upon their retirement is the home they live in. The real estate is the most valuable asset people have. It's more valuable than their 401k and pension. That is true today, and it's going to be true tomorrow, particularly if you live in Southern California. The value of real estate here is rising, it's expensive, but you're living here and you need to make sure we take care of your asset properly. And in order to deal with that asset, you need to understand that you need to be proactive because every situation is different. Everything we deal with, every time we are entering a divorce scenario, we are dealing with different aspects of a family dynamics. And in order for Glenn to provide you that information, in order for us to be effective, we have to take a neutral position to both parties. And we do that, and we are going to carry an open communication style. There are no agenda here. The agenda is to be your guide. The agenda is your GPS through this process. We want to determine the best real estate option that's available to you. And in order to do that, we need to investigate it. A divorce realtor understands what it takes and how complex this process has to be. And that's why we encourage you to work with somebody who's familiar with this scenario. Educate yourself. Our job is to educate you to make more informed decisions. We want you to make informed decisions because divorce settlements are final. If you make a wrong decision because you don't know about it, you have to deal with consequences of that in the years to come. So there are questions you need to ask, and there are answers that you need to have in order to make the informed decisions. These questions are in different categories. So the questions to ask are in the area of assets, income, financials, debt management, the expenses, the upkeep of the house, and the maintenance. That is where Glenn and his team come in because they're actually trained on how to deal with the divorce situation in the financial matters in the divorce situations. On the affordability and financing, my friend Tommy Evans is an expert in that area. In the area of legal, we have attorneys that are experts in mediation and collaboration, or we have people that work in litigations. I'm going to let you in on a little fact. When you go through a divorce, you don't necessarily have to go through litigations. You can do it through mediation and collaboration if your partner is amenable to it. There are also instances that you can go through mediation to resolve many of the issues you're dealing with in your divorce. And the pieces that you cannot agree with, you can actually litigate. That saves you significant amount of time, money, and headache when you go through that. There are issues with healing. There are issues with mental health and lifestyle changes. That's where our family therapists come in, that they can help you. Your insurance, your health insurance actually covers some of that expenses. You need to be aware of that and take advantage of that. There are issues related to the location, size of the home, proximity to amenities or what you need to do, community resources. And that's where I come in. I can help you with that. That's why we ask you to be proactive in this scenario, because we need to understand everything. We need to have a roadmap on how to get there. And then is the simple question of what we are going to do with the house. And that's where we're going to dive in to some of the areas you need to be aware of. There are really two options: keep the house or sell the house. So let's see what are the best options available to you. As far as keeping the home, some of the decisions you need to make, some of the understanding that you need to have is if you can afford the home. My partners, my friends, Glenn and Tommy, can help you with that. We can look at your expenses, we can look at your income, determine if the house is affordable to you or not. However, there are instances that you can actually afford the home, but we don't know if it's a good idea for you to keep it. There is a concept in real estate that we call it being house poor. That means majority of your income or significant portion of your income goes to pay for the house. And you're not going to have enough resources to pay for your living expenses or for the type of lifestyle that which you would like to have. You need to understand what are the tax consequences of your decisions. There are a few loopholes in the tax code that allow you to keep the gain on your home as your principal place for residence. You need to understand where you are. You need to know where you are. You need to know what financial impact you have if you buy the home or sell the home. And my friends, Glenn and Tommy can help you with that. You need to understand what your financing options are. So that's as far as your investigation is concerned. But if you want to keep the marital home, the first thing we end up doing is we end up doing a comparative market analysis for you. We will visit you either virtually or in person. We would like to see what condition your house is in, what you've done to the house, what improvements you've done to the house, in order to get the proper value for you at sort of a 10,000 feet level. Then what you have to do an inspection. You say, why do I have to do an inspection if I just want to transfer the house in my name? So let me step back and cover something for you. The easiest way to transfer a property, okay, is to create a quitclaim deed. And with a quitclaim deed, one person transferred their rights in the property to the other person. However, there are going to be a lot of issues with that approach. You need to treat the house, the existing house, the marital home, as a new purchase. And I will cover that for you. So one of the biggest issues with buying a home or acquiring the home is deferred maintenance. You need to do an inspection on the house to make sure that the house is in the shape you think it's in, to understand what potential what potential repairs you need to do in the house. Let me give you an example. We had a case that the husband and wife got a divorce and wife kept the house. 2 years later, she was on a vacation and we have this crazy rain as we are having these days. and the house got flooded. When she came back, she was gone for a few days. So the rain went to the second floor. From the second floor, it leaked to the first floor. Huge mess. The furniture was damaged. The entire house was damaged. So she called the insurance company to file a claim. And the insurance company said, we paid for this damages 2 years ago, 2.5 years ago, when we paid you to repair the roof. So what has happened is the husband has used one of his friends. They went inside the attic and they fixed whatever they thought the problem was. And with the extra money, they went and bought a truck. And they thought they were very smart doing that. Well, when she called the insurance company rejected the claim, said we already paid for the house, for the roof to be repaired, and you guys didn't do the right thing. Now, our client was stuck with the house with all the expenses of repairing the home, and on top of that, the house became uninsurable. The insurance company dropped her as an insurer because they thought she was pulling a shenanigan. They thought she was pulling a fast one on them when she had absolutely no clue all of this was going on. That's a real scenario. It can happen. So what you need to do through this process, after you do your inspection, after you do this inspection, is you need to look at the insurance history. You can call your insurance agent. They can give you the insurance history of the house. There is a report. It's called CLUE, Comprehensive Loss Universal Exchange. It's like your credit report. It keeps track of all the matters related to the house for the last 7 years, even if you didn't own the house. You can look at that report and see what claims have been filed against this property, and you can make sure through the inspection that those repairs were done correctly. That's essential for you not to have risk in the future. Then you have to do a title review. So what we do, we get a title report from you, from the title company, and we can look at it and see if there are liens against the property, if there are tax issues, if there is any debt that's been secured against the house. We want to make sure that you're protected in that process. There are over 70 things that can go wrong with a title. That's crazy. So you need to have a title. You need to have the title reviewed in that process. Then you take your inspection report and all the information you found, you hand it to an appraiser. Armed with that information, the appraiser can give you the proper value of the home. So you see, it's a lot more elaborate than just a quit claim deed. You need to make sure that you do all the steps necessary, and we can help you in that process. I know this is complicated. It's not very easy. That's why I put in here so you understand how complicated this process can get. Now, two more things as far as keeping the home. If you decide to keep the home, you need to make sure that you have title insurance in place for the property. If you got a mortgage on the house, the chances are that the bank requires you to get a title insurance. What the title insurance does for you is protects you against any unknown claims that might come against the property. These are all real scenarios that have happened, and I want to make sure that you know about them. Another thing that I want you to do is to get a home warranty. A home insurance is different than a home warranty. A home insurance covers you against damages and anything related to the structure of the building. A home warranty covers all your appliances, including water heater, that with a small amount of payment, you can actually replace or fix anything that goes wrong with the appliances in the house. They also provide some assistance with fixing the roof, or if you have a leak, or if you have an electrical issue. It's a very inexpensive way to help yourself when you own a home. So the next option we have is selling a home. Our goal, my goal, is to get the highest value for your house. That it's your most expensive asset, it's your most valuable asset, and we want to make sure we do right by it. We need to make sure that we can get every dollar we can get in this process for you. But before we enter that process, we need to have a conversation to understand what you are going to do post-divorce. What are your living arrangements? We don't want to go just list the house and sell the house and then say, okay, what are we going to do next? So we need to know what are your needs. That's why I said you need to ask the question and have the answers. That's where it comes handy. We need to know where you're going to live. We need to know how much home you can afford. We need to know if you want to go rent a place. That is a completely acceptable solution as well, until you decide what you want to do. If you're going to sell your home and you're going to buy another property, we need to make decisions. If you need to stay in the house for a period of time post sales, we can put that as of our contingency to sell your home. If you are buying a property and you want to make sure the property is closed before we sell the house, we can put that contingency in place. These are all the things we do ahead of time. These are the conversations we do for your peace of mind, for you to be protected. Now, when we want to sell the house, after our meeting, after our assessment, we create a comparative market analysis for you that looks at the neighborhood, that looks at the area, and we look at everything that has sold, everything that's available in the market. Based on the condition of the market, we determine what is a range of the value for your home. And then we decide what the market timing is. I give you a perfect example. We usually do not suggest anybody bring a house to the market from Thanksgiving to end of the year. Very slow time in the market. You don't get the best value for your home. So it's important to know that. If we anticipate that the market timing, that the market condition is going to improve, we might ask you to wait for a couple of months. If we anticipate the interest rates to go down, we are going to ask you to wait before we take the house to the market. We are going to discuss options with you to increase the home value. And if you're amenable to that, because sometimes people are so sick and tired of everything, they just want to sell the home. And I completely understand that. I've been there, I've seen it. But if there are ways that we can make certain amount of repairs to make the home more appealing, then we are going to make those suggestions for you. We are going to come up with options in that scenario, how you are going to pay for those repairs. You might not have the financing available to pay for them. You might not have available cash. You might not want to deal with paying for it and then try to split that cost. So what we can do, there are companies out there that they will come in, there are contractors out there that they would come in, they will do all the repairs for you, and they get their money from the escrow settlement after the property is sold. In that scenario, I mean, if we can spend a few $1,000s and get a return significantly higher than the cost we put in the house, we are going to suggest that for you. We are going to tell you these are the differences. It's the difference between selling your home at a wholesale value or retail value. Anything we can do to make your home value closer to a retail, to a cream puff condition, I'm going to suggest it to you. We are going to have a discussion about it, and then you can decide how we are going to proceed. And we are going to educate you and manage the sales process. We are going to let you know what to expect. We're going to let you know what issues are going to come up. And my job is to actually solve those problems. My job is to reduce the stress for you to go through that house sales. So let me go to my next slide. So this is what you need to know. And you know a lot of it already. Divorce is a complicated process. It's highly emotional. It is hard. And it's a legal and financial entanglement. We need to be able to divide up everything legally and financially for you. And there is there is a significant amount of expertise. I mentioned that earlier to you. There are many aspects to your divorce, and no one on this call, nobody that I know has all this expertise to do that. I remember when I was going through a divorce, I thought, well, I'm a CPA. I know what's going on. I know the numbers. Well, my friends, I was very wrong. It's very complicated. You need to understand many aspects of this. That is why I suggest to work with somebody with Glenn. And we do that all the time. We work with certified divorce financial analysts because they're different than CPAs. Just because somebody is a CPA, like me, doesn't mean I have the answers, the complicated answers that somebody can, like Glenn, can dissect for you. There are legal aspects that need their own expertise. And for whatever reason, every time somebody wants to get a divorce, the first thing they think is, I need an attorney. No, not really. You need an army of experts to help you with this. Your attorneys are competent at what they do, but they're not experts to help you. If every time you go to an attorney and you pour your heart out, and I understand you're going through a difficult time, as much as they care about you, they do not have the expertise and the trainings to help you. Your mental health, your children's mental health need to be addressed by a professional. And many times your insurance company covers many of those costs. So going through this process does not necessarily, it's going to be expensive. I actually think it's going to be cheaper. Your financial matters need to be addressed. Your real estate ownership needs to be addressed. We don't want to have a fire sale just to get rid of the property. We want to make sure we get every penny of that property for you. Your real estate financing needs to be done. And somebody like Tommy can help you. If you have an interest rate at 2.5% on the house, and the current interest rates are at 7 or 7+%, Tommy might have solutions that you can keep the house at the lower interest rate. There is a saying that it takes a village to raise a kid. I frankly believe it takes a village of experts to guide you through your divorce. I cannot overemphasize this fact. Bad decisions, uninformed decisions have lifelong consequences for you. That's why I said don't rush to make any decisions. Talking to somebody like myself, Glenn, Tommy, Patricia, Cheryl, or people in that level of expertise is the best thing you can do for yourself, for your family, for your future. Now, you're going through a divorce. This is my final note. Divorce may be the end of one chapter in your life, but it's the beginning of another. You have to deal with this, wanting it or not, liking it or not. Nobody likes it. Nobody likes going through a divorce and deal with this thing. But you must work on your mental psyche to embrace this. You need to embrace the opportunity to start over. You need to work on your mental health. You need to work with Glenn. You need to rebuild your life to create a better story, a new story with strength, resilience, and self-discovery. And I promise you, you will come out at the other end of this a stronger person, a better person, and life will be great again. Thank you for your time. Thank you for listening to me. Please be patient. Don't make rush decisions. Be informed and use the experts to help you. And with that, I'm going to hand it to my great friend, Mr. Tommy Evans.
Thank you, Dar. Yeah, that is such great advice, and I can't tell you how much it helps to have you in our corner, and you know, someone that truly understands how to navigate all the complexities of going through divorce and in the home and what to do with it. So I want to kind of talk to you guys a little bit about, you know, kind of like what the market is going to do this year, most likely. Obviously, I don't have a crystal ball, but the statistics are there for us to look at and understand. So this is kind of a graph of, you know, here in Orange County. So I just did this for Irvine, California. But you can see the average the average year median sale price is $1.183 million. And so, you know, over the next 5 years, we're going to see homes continue to appreciate. And, you know, we're likely to see $364,000 in home appreciation over the next 5 years. And, you know, we're looking at, you know, 7% just in the next 12 months. And so if you do have a home, it's, you know, obviously if you can hold on to that, that is going to be, you know, a huge part of your wealth and portfolio. Most people tend to have the majority of their wealth tied up in their homes. And so why do I feel so confident that we're going to see this appreciation? Mainly it comes down to the supply and demand. And you look at here in Orange County, they're only building 7,000 homes a year in Orange County, all of Orange County. And, you know, if we looked at new listings, just this month, we only have 120 listings for the month of, well, I guess it's only six days into it, but, you know, literally 6 days, you know, we're averaging 20 listings a day. And so, not a lot of inventory. And just for February, it was, you know, 1,800 homes that were listed for sale. So why is this a problem? You know, if we look at your demographics of age, you know, we've got in Orange County, we've got between the ages of 27 and 35, we've got 444,000 individuals that those make up the first-time home buyers. And so the average home buyer or first-time home buyer is 33 years of age. And so we have a huge influx of first-time home buyers that are coming to the market, and there's nothing for them to buy. And so we've seen first-time home buyers from who's buying homes, you know, home buyers, first-time home buyers are ticking up, and we're seeing a lot more cash buyers. And so a lot of those cash buyers are institutional money that are coming in, you know, like your BlackRocks of the world, and they're coming in and gobbling up as much property as they can, because they know if they control the market, they can charge whatever they want for rents. And so understanding this supply and demand crisis that's happening is really important for you as a homeowner. Again, if you can keep it, great. We really want to make sure that you can hold on to that property, but it's got to make sense. You got to run the numbers. You know, if you're worried about like there's a housing crash coming, there is absolutely nothing that supports that. And these, you know, the numbers don't lie. You know, we just look at the facts, and the facts are telling us that you know, supply and demand is going to continue to cause issues with home prices, and we're going to continue to see those go up based on the demographics and you know, the birth rates and just how many more homeowners are coming to the market. Next slide, please. So if you know that, you know, holding on to your home is a great option, you know, there's different ways that you can look at doing that. And, you know, ideally, most of us that have a house right now have a interest rate that's got a 2 or 3% associated with it. And so giving up that interest rate is not a desirable event. Do I have control of the slides, or somebody running this for me? Glenn, you got that?
I got it.
Okay, let's start. Yeah, next slide. Thank you. So yeah, if you know that we want to try and hold on to that interest rate, you know, you can look at trying to do a loan assumption. You know, really, if you got a VA or an FHA loan, those are the main ones that will allow for a loan assumption. But if your spouse is on the mortgage with you, more often than not, you're going to have to refinance to get them off, Now, what you might want to try and work out is a way that you keep that mortgage in place. And if your spouse can let you keep the property and let you keep that mortgage, and then you just keep making that payment, and then they can go out and buy something on their own. And you can help them kind of through that process and work through that. If you can show through a court order that you are solely responsible for that payment, your spouse doesn't have to have, when they go apply for a mortgage, they can omit that liability from their liability section, so that they're not responsible for that, and it's not going to negatively impact their ability to qualify for a mortgage themselves. So there's little tricks like that we can try and look into and see if there's a way to make this work for you. Now, when you do go to qualify for a mortgage, it's important to realize that your qualifying income in a lot of cases is, not only in most cases getting cut in half, if you have two working spouses, but on top of that, one of you is likely to be paying support, and that's really going to eat into your qualifying income that you're going to have available. And so, you might think that, oh yeah, no, I'm fine, I make, $20,000 a month or whatever the number is, and I'll have no problem qualifying. But interest rates have sky high. We're talking about 6% interest rates right now. So if you're sitting there at a 2 or 3%, and your payment's going to more than double, especially if you're going to do a cash out refi to buy out your spouse, you're going to be increasing that balance. And so it's going to be a lot harder to qualify for that mortgage. And so, if you're relying upon spousal support to help you qualify for that mortgage, that money also needs to be seasoned. So we need to see that you have a history of receiving that support. And in most cases, they're going to want to see 6 months of receipt of that support once it is actually paid out. And if your spouse doesn't pay you on the 5th month, that's going to start all over again. So now you're set back and waiting another, it has to be 6 payments in a row. And that's what they want to see. And so you might, if they miss that 5th payment, you might be waiting 11 months before you can use that child support or alimony as qualifying income. So, just make sure that you're taking that into consideration. Now, we do have ways to get creative with different financing options. You can look at, working with someone like Glenn to set up a trust, where if you're not the one that's personally setting up that trust, if we have that trust set up, through the divorce, and your spouse puts their contribution of the funds into that trust, we can use that trust income day one. We don't have to wait to see 6 months of receipt of those payments. As soon as you receive one payment, we can use that income. And so that's a great way to maybe look at things a little bit differently. Maybe I'm going to set up a lump sum distribution as opposed to having monthly support. So something that, Glenn specializes in, he can help you run the numbers and come up with what a fair number is as a lump sum number versus a monthly distribution number. And then, keeping your credit in check is so important for everything. One of the biggest things that I deal with on a daily basis is, people that, just thought their spouse was going to be paying the bill, and they stopped paying, and now all of a sudden that hurt their credit. Or maybe you're trying to get back at your spouse, and you decide, I'm just going to not pay this. Take care of your credit. It's super important. Whether you're looking to buy something, refinance, or go rent something, or buy a car, you name it. Everything has to do with your credit score these days. If you need to get a loan, if you're paying cash for everything, then who cares, right? But I would still say that it helps to have a good credit score regardless. So try not to rack up a bunch of credit card debt, you know, really try and keep your utilization, your credit utilization below 30%. And then, you know, we'll make sure that again, that you just keep paying everything on time. So when it comes down to, you know, maximizing your credit for the mortgage, you know, we're going to be looking at, you know, what your debt looks like, you know, as far as, you know, is it our debt, is it joint debt, is it community debt? All of that is going to come into play, and you know, if you have any questions regarding the mortgage itself, I'm here to answer any questions. I'm available to look at your specific scenario. I'm happy to offer up a free consultation. And you know, everybody's got a unique situation. There's no cookie cutter, you know, loan out there. You know, I have loans that you don't even have to have a job, quite frankly, you know, to qualify for. And so there's different ways that we can help you and get creative where most other banks aren't able to help you out. So with that, I'm gonna go ahead and turn it back to Dara and Glenn, and thank you so much for you guys' time.
I actually want to say, just emphasize a couple of things Tommy said. Your credit is incredibly valuable. So I know you're going through a difficult time, but please pay your bills. Make sure your bills are paid, because that is one of those events that has a long effect on what you can do. It affects how much you pay for a car, for a house, and everything else. We need to make sure that you're protected. So that is one of the best advice you can get. Also, as far as the real estate market is concerned, I confirm and I agree completely with Tommy. We have such a low inventory that we do not see any forecast that the market will drop. If anything, we anticipate we're going to have a big market appreciation, because we see the interest rates have a downward trend in the months and years to come. Thank you for your presentation, Tommy. It's always wonderful to hear you talk. Glenn, please come in, sir.
Well, you know, I don't know if I need to, you guys are doing such a great job. I'm putting someone asked for my information. I'm just putting that in here real quick, along with my link where you can set an appointment for a 30-minute complimentary virtual consultation. I'm happy to do that. You know, these guys, Tommy and Dar, you know, this is where they live. They know what they're talking about. You're going through contemplating going through a very trying circumstance. It's temporary circumstance. Trust me. And I'm okay with any decision that you make as you go through it, as long as it's informed decision. For instance, Tommy and I have worked with people that weren't the chief income producer of the home, find out that, wow, they actually could qualify for something. There was a way for them to establish that. Whether you do or you don't, you know, for me, it's just, you know, wouldn't you want to know? And, you know, with Dar, you know, I mean, here's a guy, again, he has intimate knowledge of inventory that's in escrow, what it's going for, and knowledge of homes that are coming up for sale and what they're going to go for, and the ability to give you a more plus or minus variable number than, you know, you're going to get on the online tools. You know, I forget which one it was. Was it Zillow, or one of them bought a whole bunch of real estate, a bunch of it, and they overvalued it. Now they're trying to get rid of it, okay, because they're hurting. They're underwater on it. So, you know, one mistake I see people make is relying on their well-meaning friends and family members and non-divorce professionals. A business attorney, a tax attorney, a real estate attorney is not the same thing as Elizabeth Jablecki Johnson or Patricia Van Haren. It's not their bandwidth. a investment advisor, which I am, a wealth asset manager, which I am, is not the same thing as a CDFA. They're not. And as I mentioned, how every divorce is different, they're like snowflakes. So because your buddy's divorce went one way, or your girlfriend's divorce went one way and they got one thing, or because so-and-so's a lawyer and you expect them for their knowledge, it's not the same thing as working with divorce professionals. That's one thing I strongly advise you to do. I myself didn't know even a thing as a CDFA existed when I went through my divorce. I wish to goodness I did, okay? Because someone like me would have been able to help the attorney who represented me, because everyone has their, their lane, and sometimes they cross over. Another very powerful thing that Dar said was, look, it's hard and no one knows how to walk down the path unless you've done it 2 or 3 or 4 times. And so, you're right to be, upset and disheveled, but don't use your attorney as your therapist. Sometimes people will send 30 texts to their attorney like in a day, or, they get upset, they don't call them back necessarily within 24 hours. A lot of times the attorney is doing you a favor by not doing that, because every time they write an email, it's minimum, quarter an hour. Every time they pick up the phone, and I say there's 4 aspects to divorce: legal, financial, emotional, and real estate. I lump mortgage lending into real estate. And I submit none of them could be ignored. None of them. Told you I played football for one of the toughest college coaches who ever lived. I was married 24 years. Took me 10 years to walk down that path. Took me 10 years. I was contemplating it. If you're in a situation that is untenable and not going to get better, whether it's your boss, an endeavor you're in, or your love, it's not going to get better. You got 2 choices. You can stay there like in bondage, or you can go through some pain and get freedom. And we're not here encouraging people to go out and get divorced. That's not what we're doing. We want you to do everything you can in order to save your divorce. But if you get to the point where I got to the point where I said, you know what? I don't care if I live one more day. I'm not going to live it like this. I'd rather go through the pain. And I'm going to tell you, I cried like a baby. And I had a, LMFT that helped me immeasurably. There's nothing wrong with that, by the way. My other best advice, I've given you a few of them, is take care of yourself. And I did put my contact information in the chat, but do your very best to take care of yourself, whichever way that is. You're sovereign to yourself. You came in by yourself, you're going to go out by yourself. Take care of yourself, nothing wrong with that. And particularly I'm talking to women too. The matronly thing is typically they're, more nurturing and more taking care of everyone. Take care of yourself. What that means is if you need to sleep all day, sleep all friggin' day. Don't apologize for it. If you need to cry, cry. Go for a walk. Pick up your instrument. Music saved me. Create a music playlist that puts you in a good place. Have a cup of tea before you go to bed. Have a melatonin if you need it. Listen to music, write poetry, paint. I know people who do that. Go see a show, go do something that fills you. Go outside and look at the mountains and the flowers and the trees and the moon, and be thankful. So anyway, I'm gonna wrap up with a couple of thoughts. I want to thank Dar and Tommy very, very much. We invite you to come back as many times as you'd like. These are free, no cost educational events, but I also strongly urge you to reach out to any and all of us for our opinion, a consultation. I told you I'm a big imagery guy, so I'm gonna and my guys, my magic elixir, my magic therapeutic, guaranteed to work, be good to yourself, activity is what my mom used to do when I was about 5. You draw a nice warm bath with some salt in that baby, and I'd say put some salt, maybe put some quiet music, and maybe a magazine, a glass of wine. I usually have a little bourbon when I'm taking my bath, but not too much. But get some rest and believe in yourself. I got a couple of little quotes here. I am a guy. I strive for a higher level of being, a higher level of self-actualization. Because by the way, your body that you're in right now is not you. What defines you? Because you change every day. Your body's not the same today as it was yesterday. Was you defined when you were a baby, when you were gangly and you were, pure, or when you were a teenager with, floppy hair, or, whatever, or like me, when all the hair's gone, I got hairs. All of a sudden I see a hair, I go, how did that coming out of my shoulder or something that's 2 inches long? You are your heart, your soul, and your spirit, and the people that you touched, and you are eternal. You've been here always, you'll always be here. It's about how many people you touch. So anyway, one of my mentors, one of my shamans is Dr. Wayne Dyer, and I usually use a couple of his quotes. I decided, Tommy and Dyer, I need to change it up. I'm a little stale. I'm coming with a couple of different ones tonight. He does say, when you change the way you look at things, the things you look at change. When you change the way you look at things, the things you look at change. Here's perfectly one of his quotes. He said it, okay? In the circumstance you find yourself in right now, ladies and gentlemen, Dr. Dyer says, with everything that has happened to you, and by the way, you can find him on YouTube and all over the place, one of the most published self-actualization, self-improvement, spiritualist ever. You can find him everywhere. Dr. Wayne, D-Y-E-R. With everything that has happened to you, you can feel sorry for yourself. Or you can treat what happened as a gift. Everything is either an opportunity to grow or an obstacle to keep you from growing. You get to choose. Your marriage didn't define you. It's not you, okay? There's a lot more, many other layers. I know it without even laying eyes on you. And how about looking at your circumstances as an opportunity? I got a whiteboard. I got a clean slate. I can do whatever I wanted now, no matter what age you are. I got divorced at 60, and my life is way different, and it's beautifully different. I'm 69 now, young. So look at it maybe with gratitude. However you found out about it, through deceit or lies or distrust or whatever it is, however you found out about it, you found out about it now. And you got a chance to move on and grow and expand and prosper and be bountiful and be plentiful and be joyful. I got going for a minute. I was kind of like Deion Sanders there for a second. Anyway, all right, I'm going to give you two other quick ones. How about this one? You cannot be lonely if you like the person you're alone with. You cannot be lonely if you like the person you're alone with. And I was a bachelor for 33 years, and I lived by myself. After college, I pretty much always lived by myself, and I was never alone. Okay, so those are my images for you. I invite you to come back. I thank Tommy and Dar, for being here very, very much. I wish you all the best. I hope you guys reach out for a consultation. I guarantee you that this is a temporary circumstance. This too shall pass. Have a great night, everybody.
Good night, everybody.
Thanks, everybody.